I wish somebody told me that gold is very profitable and to focus on gold and to be able to at least have one or two strategies that I will be interchanging when it comes to gold. But when I was starting back in 2020, I feel like majority of people they were trading currency because everywhere I would check on YouTube, people were trading GBP, AUD, USD, AUD USD, Euro USD, all those currency, major currencies. And JPY were so famous back then. People were really trading JPY pairs. And very small group that used to trade gold. But today I am here to encourage you at your beginning level, or if you have been advancing in this forex trading, I want you to at least pay attention to gold. Number one, it can really help you in terms of making profits, reasonable profits. Number two, it teach you very fast because gold is volatile and it happens so quickly. So gold will have so many lessons for you every day. And then number three, you are guaranteed to have at least one or two entries every day. Comment down below. Let me know. Do you trade gold? Have you ever traded gold? Do you think you will trade gold? Or what are your reasons why you're not trading gold? So today, as I teach you this gold strategy, I want you to first have an open mind. And the second thing, it is easy. And I want to help you combine the three strategies that I will show you, not even the three strategies, like the three, they are called the key points that you'll be checking if you want to start trading gold. Let me share my chart with you all and I will go straight to the 4 hour time frame. So gold, the best thing with gold is that it is very, very rewarding. If you're understanding, it will reward you very well. So I want you to pick any high time frame of your choice. It can be weekly, daily, or 4 hour. So you're the one to pick a time frame of your choice. Why are you picking the higher time frame? We need to know the direction of the market. Higher time frames helps us to be able to know what the direction of the market is going, or what is the direction of the market. Don't tell me you're trying to sell gold on 5 minutes, yet on 4 hours the market is very bullish. What that happens, yes, you can get lucky enough to get a sell opportunity, but those sells that you're trying to trade on 5 minutes, they are called short term. Those are retracement, and they are very, very risky to trade, more so if you're beginning to trade. So number one, what I want you to do, I want you, number one is to choose. I want you to choose higher time frame of your choice. Huh? So, and I've said it can either be weekly, daily, or 4 hour. These are considered as higher time frame. If you are trading on 4 hour, we consider you as a higher time frame trader because it takes 4 hours only for one candle to close, and it takes six candles for a whole day, six candles to form in a day. So it means 4 hour when you're waiting for only six candles. When you go to 1 hour, you will be seeing 24 candles. That's why 4 hour is considered as a higher time frame. So in this case, I will be choosing 4 hours. So I will show you what to do, and then in this column, I'm telling you now the time frame for me in this particular illustration I'm choosing. So number one, me, what I've taken 4 hours. Okay. Number two, at least you're using three confluences. So yes, you use 4 hours or higher time frame, but I would highly suggest for three confluences. What is a confluence? Confluence is something that is supporting the previous course. For instance, if you're telling me to buy GBP USD, I need to know why am I buying. Have you seen a bullish engulf? Bullish engulf is a confluence because bullish engulf means market is a buy. Have you spotted maybe were you using indicator that you saw that a moving average has crossed each other? Are you using resistance that you can see market has broken the resistance? Can you see? Confluence, it is at least three things that your mind knows. Even if I see the first one, I won't be in a rush to enter until I see the second one and I see the third one. Now, for me, my conferences, when I'm teaching free student, I have the paid students and I have so many confluences and I have arranged the strategies very, very well. If you want those confluences, those strategies, you have to pay. Either you pay $1,500 for 1 month, or you pay $1,000 to buy the course and learn for yourself. But these are confluences. When someone maybe approach me, maybe they are strangers, they are here on YouTube, someone just approach me and they tell me, give me confluences, what do you check in the market? So this is what I give for free, and I'm comfortable giving it for free because it works anyway. So the first thing I tell people is that I want you to use a trend line in your chart. Trend line in your chart. That is your first confluence. The second confluence, I want you to use a pattern. Pattern, it can be either, I have two patterns that I normally teach for free. It can either be a double top or a double bottom. It can be a pattern. And the third, I want you to use my latest strategy, which is CIB strategy, that I'm giving it for free. Now, those are the three confluences. And if you will be here for long, you will not hear me going outside trend line, pattern, which is either double top, double bottom, or CIB, our newest strategy in town. Yeah? So those are the three confluences that we need to be able to trade, and to be able to be to be able to maximize. So that's why I've said there are things that you're checking. You check 4 hour time frame, then you check the confluences when you're trading gold. And then number three, it is your target. What are you targeting? Are you that trader who target pips? Do you target, target is in three categories. Do you target pips? Do you target zones? Or do you target, there are people who target risk to reward ratio. Now, if you're that person who target pips, I want you to stick with that. For me, I stick with pips because my strategy gives me more than 500 pips. So for me, I stick with 300 pips. If I enter a strategy, I put 300 pips and I wait for it to hit. There are people who target zones. So zones, sometimes it can be more than 300 pips, can be 600, it can be 100 pips, because it's a zone, it keeps changing. There are people who target according to risk to reward ratio. If I'm risking $100, if I get $200, I'm out of the trade. If I'm risking $1,000, if I get $2,000, I'm out of the trade. They target according to risk to reward ratio. So that is something I know majority of you who are watching me, you have not put into consideration, but here I am giving you guys for free. So we will follow our three most things that we need, and I have said you have to choose the higher time frame of your choice, weekly, daily, or 4 hour. We have chosen 4 hour. Use at least three confluences, trend line, pattern, or a CIB strategy. And if you don't know what CIB means, there are so many videos I have done about CIB. You have to go and check them out, and then target pips. So this video will be so quick because I want to show you how you can amass multiple pips using this formula. So if you've been looking how to trade gold, this is for you. All right. So we will start with trend line. So trend line, how I come up with a trend line, I use a pattern to get a trend line. Anytime I will ever find a double bottom, let's say this is my double bottom. Anytime I will ever find a double bottom, this is where I will start my trend line, like that. So this double bottom guides me to know how to start my trend line, because a double bottom means that is a key zone already. So in this 4 hour chart, I want you I want to show you that we have this double bottom. In fact, it's not a double bottom, it's like a triple bottom, because it has been tested so many times. You can see. So I like going to a zone where has been tested most times, and I will use that zone for my beginning of trend line. And I have to do a different video of how to do trend line trading strategy, so that majority of you can know how to go about it. So in this case, I want to connect this last point with the second last point. You can see. So let me just make it very, very like that, and then like that. So I'm connecting how many points? The first point. So I'm connecting this, you can see I'm connecting this point to this point. Now, what you need to understand with trend line, that most trend line strategy needs three touches. The three touches gives direction. So this trend line has touched once and has touched twice. Now, if I flip, I will see my third touch. Now, two things can happen here, guys. Two things can happen here. This market can either break the trend line and continue to sell, or can reject trend line and continue to buy. Now, that is a trend line strategy. And if you want this trend line strategy, comment down below and I will do a video on trend line strategy. So there are two things that can happen on this trend line, and that's why we cannot use trend line by itself. If you use trend line by itself, how will you know if actually this market will break, and how will you know if this market will actually buy? So if you just use trend line alone, you are to the mercies of this trend line to be broken. So once you have the third touch like this, I like going down on the time frame. So we will start scaling down on a time frame, and the first time frame I will go is 1 hour, just to check what is happening on that area where the trend line has touched. Do I have a double bottom? Remember guys, something that I didn't mention is that we check double bottoms on an uptrend, because this trend line is showing us that the market is a buy. It's showing us that we have an uptrend. So if I have an uptrend, what pattern do I want? Do I need a double top or a double bottom? If your market is going up, you need a double bottom, because a double bottom will be supporting the trend of the market. So anytime you spot an uptrend, of course, you are looking forward for a double bottom. If the market is a downtrend, let me show you. If your market is a downtrend, automatically I won't be looking for a double bottom, but I will be looking for a double top, because I want to continue with the trend of the market. So if when I did my trend line and I saw I am at a third test, I'm at that touch. That means business. Rejection, breaking, rejection, breaking. And we have a clue, we have a feeling, a red flag or a good flag or a green flag that there's some rejection that is happening, because you can see sellers came in touch and they are getting rejected. Now, the only thing that can make us go to the second level is if I find a pattern. And as I go to 1 hour, I'm looking, do I have a double bottom on my left? Is there a double bottom on my left? So what you're seeing on 1 hour, you're seeing a break of support. There's no double bottom. So I go to 30 minutes. Do I have a double bottom on my left? Again, I check. And on 30 minutes, my double bottom is all the way here. It has not touched. So there is possibility if this market continue to react, but the trend line is helping me to realize that it might not go down. So if you are mid trend line and you go to 30 minutes, you'll be waiting like this. Oh, I'm waiting for double bottom to touch. The trend line is telling us I think this market is rejecting. I think it is not coming to this bottom. So if I go to 15 minutes, let me see what I have. So when I go to 15 minutes, I find already there's an OPT double bottom that has been hidden. Now, see, we have two things in play. We have a trend line, and also we have a double bottom. And this is not just a normal double bottom. This is a double bottom, which is OPT, guys. This double bottom is OPT. It is not available on 30 minutes. Can you see? Can you see how that support is disappearing? So when we go to 15 minutes, my double bottom disappears completely. So I have a double bottom on 15 minutes. Now, I'm combining three strategies, and I know these three strategies, they are going to give me massive, massive returns. So I have my neckline there. That's my neckline. And once I have my neckline, we need to get the half. And I got my half there, right? I have my half there. So I have my neckline and I have my half. So the only confluence that is remaining is me to identify CIB strategy on this double bottom. CIB strategy, C stands for, I will recap. C stands for cross candle. I stands for indecision. And B stands for break. So this cross candle, it is in a point of not knowing. That's why we are calling indecision. They don't know, will we buy, will we sell, and then you put a box and then it breaks. So cross candle mostly happens like this. It's a cross, a candle that looks like a cross. And what happens is that both buyers and sellers, they have the same energy. So you're waiting for either the direction of the breaking. Now imagine this is your confluence, that confluence of a trade that has a trend line and a double bottom, and you're just waiting for, you identify a cross and then you wait for it to break. This is amazing. Now, I've never taught this way where you are using the three confluences. So this one will be a bang because you're using three confluences, and we used to use each strategy independently, but now today we are combining everything. Now, if I come and I look where there is rejection, I already see rejection candles that are so many. I'm seeing, number one, I'm seeing like a hammer. Number two, I'm seeing a cross. Number three, I'm seeing a pin bar. I'm seeing so many rejection candles, but we will work with the tall one, or we can work with the green one. Whichever you want to work, you can work with the green one, you can work with the red one, but all these are rejection candles, and we have a cross in the middle. Now, in the normal strategy that we used to do, we used to say we wait for current resistance to break. Now, the double bottom strategy, we normally wait for CRB, current resistance, to be broken. Now, if we wait for CRB to be broken, we also have that in place. We have the green candle, which is a cross candle, even if it has a body, and also you can call it like a hammer or something, but we have all these candles, or the red candle, but we'll be waiting for our CRB. So you can see the confidence that comes in with this rejection candle. We have the cross is here. You can spot it. This is your cross. So let's be clear. That is my cross. Now, the green one is your hammer. The red one is your spinning top. The next red is your cross. The other red is your hammer, or yeah, it's like a hammer without a wick, and the other one is like a momentum. So yes, there's a CIB there, but let's see what the market will do. Will we get a breaking of CRB strategy, or what happens now when the market is going to break? Notice, guys, and I want you to pay close attention. We had cross candle combined with other rejection candles, but now we have a pure cross candle that is a green one. Can you see this pure cross candle? Now we have a cross candle, and you cannot ignore it. I'm telling you, you cannot ignore. So if I remove this box, let me remove this box. If I remove this box and I have that cross candle, imagine having a cross candle and the market is coming to break CRB. What? It's coming to break your CRB. Initially, remember we used to use CRB. Now you have combined CRB with the cross. With CI, we are combining double bottom that uses current resistance to break, but at the same time, we have combined CIB where we need to identify a cross candle, and we have seen it, meaning this double bottom, the trend line, and the CIB, they are coming together. So when the market breaks like this, the first trade you're entering is up to half. Now, up to half is 120 pips. But if you are trading cross strategy by itself, guess what? You'll have made 50 pips because you will only trade 50 pips according to cross. So if that person who is trading only cross strategy, they will make 50 pips. But the person who is trading a cross strategy, the CIB strategy, and they are trading the trend line strategy, they are trading the double bottom strategy, they will get 120 pips. That is the beauty. So once you come and put your position here, long position, you come and put your position here, and you are targeting up to there. Let's see how this trade behaved. Let's see how this trade behaved. Now, our trade hit take profit, and you knew where to exit because you're not exiting now according to double bottom alone or trend line alone or CIB alone. You are exiting according to the three confluences. So you got 120. Why? Because of combining three strategy. So here, if you were to exit, in case the market broke out that box, that was your exit. That was your exit, guys. Now, the other thing is that, remember, the market, this box will be used for retracement purposes. Now, we are waiting for half to be broken. So if our half is broken, we wait patiently to see, will they break our half? We are trying to see if half will be broken. So once the half is broken and we have a cross that was left behind, there's so much probability that the market can come back to retest this box, or the entire CIB box can, or CIB where CIB happened, there is a high chance. So what you do, you put very small lot on the upper side and put a very, very big lot either on the top of this box, either half of this box, whichever you will decide. Now, this box of the CIB is helping you to identify in case anything happens. If the market comes down, I know where to target. And remember, you are targeting way back. Oh my goodness, that is 614 pips. 614 pips, that's a lot of money. So in case they don't retrace because you had not traded with a high lot, you will not again miss the opportunity. So when the market breaks half and down you had entered with a cross, put orders at the cross because there's a possibility of retracement. Let's see what happens to this market. So the market, you can see, they come to try to retest. You can see they come try to retest, but they never come to the box. Let's see. Up to when they come back to the box. Now, don't tell me this is a coincidence. No, we knew that this box is very important and it can be retested. But imagine if you didn't have CIB strategy. You'll start panicking, and you'll be on drawdown. You'll start saying, oh, this strategy, they don't work. It's because you don't know how to use confluence. Trading gold needs to be having a lot of confluence. And from that, retesting the box, just retesting the box, the market is going directly to our neckline. So this is a way to get massive, guys, massive profit trading gold. It needs a lot of discipline. It needs a lot of dedication. It needs confluences. Now imagine you made 120 pips when you are starting. Now your orders are at the center and at the box. You had so many orders, but the good thing is that at least 2 orders were activated. And if you had 2 orders, you have got more than 574. Now, for the target, imagine if you are targeting a zone, you not have made 574. If you are targeting risk to reward ratio, would have come out immediately. But if you are targeting pips, you'd maybe target 50 pips. That we are targeting zone. Our zone in this case is neckline. That's why we are massing say 574 pips. Now, I want you to spot something that has happened here. Now, here, the market has broken half. Now, once it has broken half, below it breaking half, we have a cross candle. So CIB setup has already happened again. So once you're trading double bottom, you're trading neckline, trend line, you're trading CIB, you're combining everything. You can't be lost in the trade. Now, what if you come and put your trades here? So we can have two orders. You can have an order back at the neckline, and you can have an order back at that box. It's you to choose where you want to put your orders. And then now you ride again all the way to this distance. So what you do, when the neckline is broken, you measure that distance and pull the box up like that, and you can target TP, either half of the TP or full TP. So it's you to choose. And that's what I'm saying. This strategy can get you massive pips if you understand what you're doing. So if our trade will be activated, just going half the distance is 369 pips. If it goes full distance, it's more than 700 pips. Remember, you made 500 pips, you made 120 pips, you made all these pips. Now let's see if the market came to retest. So the market, you can see they came to retest to the line, but never came to the CIB box. So the CIB in this case gave you more confidence to enter this buy because the market broke. And as it was breaking half, I want you to see, as it was breaking half, it was also breaking the CIB box. So even if you entered, immediately half was broken, and you entered, in those 15 minutes, you'd have made yourself 217 pips. But anyway, that is how that trade ran. So let's see if the market hit the take profit. So take profit one was hit. And you can see it's going towards take profit two. Now, if you look at this chart, where did the confidence come from? What do you think made everyone made a lot of money? This is gold. You just need to have a plan. You just need to have a very good strategy. For you to have a good strategy, at least have three confluences. They are blending, they are helping each other. You're being given confidence by this strategy, because whoever was trading with trend line alone, they didn't have much confidence because they didn't know how to enter. Yes, you have gotten a trend line. Then, how do you enter? Yes, I have a double bottom. What if it retraces? But if you are combined trend line, pattern, and CIB strategy, you're good to go. You will make a lot of progress when trading Forex. Thank you so much, guys, for watching. I hope this video has helped you. It was quite a big video, but if you have followed whatever I've said, trust me, you will be able to trade gold. You will be able to trade gold every day and make a profit. And that is something that I want to see my followers here on YouTube making a profit. Thank you so much for watching. See you in the next one. Bye bye. Love you.